This year is huge for crypto, and this once-in-a-lifetime opportunity is something I've been talking about for the last 3 years on this channel. This is our chance to beat the rat race, escape that 9 to 5 we have zero passion for, and get some of that early financial freedom many of us investors are looking for. That freedom which is almost impossible by focusing just on work or by investing in other sectors like the stock market. Because after 8 years of investing in crypto, I can tell you that anything is possible. This is my third crypto cycle, and I'm going to use all of that experience to help you potentially win big in this bull market. Like most crypto investors, it went tits up for me in my first cycle. I got greedy and I didn't put enough time and effort into learning about crypto. My second cycle, I cashed out a huge sum of money, and I'm on course to do the same in my third cycle. In today's video, I'm going to be talking about 4 of the most important indicators to help you with timing, because timing is everything and is key to getting out with profits and maximizing your gains. Now, you can use each indicator separately and it will give you a good idea of where we are in the cycle, but to get the most out of them, we can use them together. And I'll be finishing the video off with how I'm using all 4 indicators together to help me with my own exit strategy. The ISM index, one of the best indicators for almost everything in the global economy. ISM manufacturing index, a powerful tool that tracks economic growth and contraction since the 1940s. This metric doesn't just show us where we've been, it predicts what's coming next. Historically, this metric has been incredibly accurate at predicting Bitcoin's market cycles. When the ISM peaks, Bitcoin historically tops out. This happened in 2013, 2017 and 2021, and in 2025 we're seeing something unique. The ISM remains below 50, signaling an ongoing economic contraction since late 2022. Translation, we're still in the early stages of a new business cycle and the crypto bull market. The ISM manufacturing index is an important economic indicator that reflects the health of the manufacturing sector in the United States. When the manufacturing index is high, it indicates that the manufacturing sector is expanding and the economy is growing. This can have a positive impact on investor sentiment and lead to increased demand for cryptocurrencies. Long story short, the ISM manufacturing index is considered a key indicator of the state of the US economy. A PMI reading of over 50 means the sector is growing compared to the previous month, while a PMI reading under 50 or under 50% means the sector has contracted month over month. Just to be transparent, I've become a little bit obsessed with my exit strategy in this bull run. If you see below in the description, you're going to find the link for my premium community over on Skool that's focused on crypto investing and helping you with your cash out strategy. There are currently 3 crypto courses available and a weekly newsletter exclusive to members. In the newsletter, you're going to get loads of valuable info, including all the indicators I'll be using to help me maximize my crypto profits this year in 2025. So to sum up, our first important indicator, the ISM index, is a brilliant tool to understand the macroeconomic landscape and the general health of the economy. By watching it, you can get an early read on when liquidity conditions might tighten or loosen, and that gives you clues on how risk assets like Bitcoin are likely to behave. The key takeaway is that Bitcoin moves with the larger economic cycle. If you can align your crypto strategy with the macro environment, you'll have a much better sense of timing, positioning, and the risk reward on any given trade or investment. Global M2 money supply. This is the measure of money in circulation, covering everything from cash to checking account to more liquid forms of money. When central banks are printing money, expanding credit, or loosening financial conditions, you see the M2 money supply expanding. When they're tightening, you see it contracting. It's not just the US M2 supply you need to care about, it's the global M2. The US Federal Reserve is a major player, but so are the European Central Bank, the Bank of Japan, the People's Bank of China, and others. When global M2 is expanding, you're seeing a coordinated global liquidity injection. This can push asset prices higher, especially something like Bitcoin, as the whole world is flooded with cash. When global M2 is expanding and liquidity is increasing, Bitcoin starts to look more attractive because it's a hedge against the debasement of fiat currencies, inflation. It's a store of value in a system with inflationary pressures from central bank policies. Looking at the global M2 money supply compared to Bitcoin, you can see that Bitcoin has gone up with the global M2 money supply and is very much correlated. Historically, Bitcoin's price has been very closely tied to the global M2 money supply, an 83% correlation to be exact. Based on data from the last two cycles, 2017 and 2021, Bitcoin has peaked before the M2 money supply has started to fall. This is when you need to stay tuned in to what's going on with the Fed and other central banks around the world. I'll go into this in further detail at the end when we put everything together. By the way, if you want to know my latest exit strategy, see below for a recently published video that's got you covered. Before we go any further, I want to let you know that this video doesn't contain any financial advice. My intent is to simply help you with my 23 years of investing experience. The Bitcoin dominance chart. Bitcoin dominance uptrend. When Bitcoin dominance is rising, it means Bitcoin is outperforming altcoins in terms of market capitalization. This could signal that a shift is occurring, where investors are moving funds from altcoins back into Bitcoin. In this phase, altcoins tend to underperform relative to Bitcoin. Bitcoin dominance downtrend. When Bitcoin dominance is falling, altcoins are gaining more market share and outperforming Bitcoin. This indicates a favorable environment for altcoins to grow relative to Bitcoin. After Bitcoin peaks, it's time for altcoin season. This is when smaller coins tend to skyrocket as investors shift the focus. Here's how it works. Bitcoin dominance. Bitcoin's share of the overall crypto market starts to decline after it tops out. As I'm sat recording this video, this is where we are now. Bitcoin dominance has started to fall and alt season has started. This is when altcoins take off, often delivering massive returns, but the window is short. So timing is everything. So part of recognizing the end game is to monitor Bitcoin dominance. When it starts to dip, shift your focus to high potential altcoins, but don't chase the hype. Either stick to your well-researched portfolio or get into one or two others if you have fully researched them and you have high conviction. If you look at historical data, you can see the Bitcoin dominance chart can help you time your exit. In 2021, we saw a double top. The first major high for Bitcoin was achieved on the 12th of April, 2021. The Bitcoin dominance dropped from around 60% to 50% at this time. It was the same in 2017. On the way up, Bitcoin's all-time high. Bitcoin's dominance started to fall. So when we see a sharp decline in Bitcoin dominance, it might be time to take some profits off the table. The fear and greed index. This is where we touch on psychology, which is hugely important in any investing. Let's look at the greed, which is 76 to 90. While the market is optimistic, there is still potential for some upside, but it's also a signal that caution should be exercised. This is when we should be laser focused on our exit strategy. As the index approaches the greed zone, consider trimming positions in overbought altcoins or assets with excessive speculation. You might sell 10% of your overall portfolio and convert it to fiat currency. If we look at extreme greed, this is 91 to 100 and is typically a warning sign that the market is overheated and maybe nearing a local top. Prices might be inflated by emotional buy-in and a correction might be just around the corner. If the fear and greed index is in the extreme greed zone, it might be a good time to take profits on your crypto, especially in riskier altcoins or highly overbought positions. Many investors, driven by FOMO, may be buying at inflated prices, which increases the chances of a price pullback. If the fear and greed index is above 90 and your portfolio is in significant profit, consider taking partial profits or reducing your exposure to riskier assets. This is an indicator I would take seriously, and if you do, I feel it will serve you well in 2025. Putting it all together. Now, using the info I've shared, I'm going to tell you how I'm going to use all the indicators together. Now, while I'm not an expert, I'm just an experienced crypto investor giving you my thoughts and strategies. Basically, how I intend to maximize my profits in this bull run. So let's rattle through what I'm going to do. Let's say the ISM PMI reading goes up over the next few months, but then starts to fall and drops below 50. I'll consider taking profits. I'll be monitoring the global M2 money supply using TradingView or similar, and we'll be reading articles to see exactly what's going on with the global economy. Going back to November 2021, the Fed made an announcement about increasing rates in mid-November 2021, and this was literally the market top. So pay attention to what the Fed is doing. I hope to be fully out of the market before the Fed start talking about increasing rates, let's put it that way. Based on the previous crypto cycles, I'll be looking to cash out when Bitcoin dominance drops to between 45% and 50%. And to finish off, I'll consider selling if the fear and greed index gets above 90. Now, I'll be looking at all 4 indicators daily to help me with my exit strategy. Now, I'm going to assume you fully understand this video. You've taken some notes and you make some decent profits. You now have to deal with paying capital gains tax. It's just a fact. If you're not sure what tax you need to pay, see below for a video that will help you legally avoid paying your crypto tax. If you have any more useful indicators that you're monitoring daily, let me know in the comments. Let's get some conversations going and help each other win in this bull run, in this once-in-a-lifetime opportunity. If you've enjoyed today's video, if you've taken some value, hit the like button and subscribe for more content that's going to help you as an investor in 2025. Thanks for watching.